to look at this is Lowry Health Centre, which is from the 2017 Examcraft. So we're going to work on service rooms this week. So instead of trying to get a little bit ahead and do a couple of these questions up here. So first job, just draw out your skeleton. You'll be asked to do a statement of capital, which is to work out how much the thing is worth at the start of the year. A couple of things, always underline this here. You have 2 years accumulated depreciation just so on fixed assets at the start. So we need to be aware of that, right? So our assets and liabilities, the vast majority of them come from the top. We're looking for anything at the first of the first. So you're given first of the first up here. So you have all these things here at first of the first. We'll show you the other ones when we get to them. Anyway, so buildings is an asset. Buildings is 500,000, and there's two. We know buildings are fixed assets, so there's going to be 2 years to accumulated depreciation on that fixed asset. So we need to go down to the bottom and see what the depreciation is. So it's 2% for a full year. So that's 2% of 50,000, which is 10,000 or 500,000, which is 10,000. So 2 years of that is 20,000. So 2% of 500,000 is 20,000. Take that away and you get 480. Next one is equipment. Same process. So we know equipment is a fixed asset, 90,000, and that all assets have 2 years. All fixed assets have 2 years accumulated depreciation. So we'll go down to the bottom and we'll see that the equipment is 10% of cost for the full year. So it's 10% of 90,000 by 2 years. So that'd be 18,000. So 19 minus 18 is 72. Then we fixtures and fittings. Again, another fixed asset, 30,000. So less accumulated depreciation. We'll go down and see what it is. Fixtures and fittings are 15% for the full year. So 15% of 30,000 by 2 is 9,000. So that gives you 21,000 for your fixed assets. All right, next one is stock of health food 25. That's our opening stock. Now that is not a fixed asset, it's current asset, so that just goes straight in. Then we have stationery, again, same thing. That's a current asset, so no depreciation. You can stop thinking about depreciation now. Heating oil, 360 is an asset. Health shop debtors, well, debtors are assets. 500, that's new for us, so we'll see that in a bit. Creditors for supplies are liability. It's 1,600. Clients' fees in advance, so they've paid us in advance, so we owe them either the service or the money back. So it's a liability. 62. Investments, 250. Now, you'll always have investments in these. They'll either give them to you or they'll give you investment income down here and ask you to work them out. Authorized share capital doesn't go in, issued share capital does. And issued share capital is 700,000. So that's everything in from the top of the question. And we're looking for other things that are trading profit and loss account. That are on the first of the first. You'll always have your bank balance. So it'll either be debit side, which is an asset, or credit side liability. So if it's over on this side, it'd be a liability at the top. It's always the one at the top of the question. So 3260 is our bank balance. Now, next one from the middle we will always have is the loan. So we're going to have bank loan, which will be a liability, and we'll also have loan interest due to. There's a couple of different ways they've asked this in recent years, but this is the straightforward enough one. So it told us that the bank loan plus 18 months interest at 6% on the 31st of the 5th, 2016 is 43.6. So they haven't told us what the loan is, but they've given us enough information to work out what it is. So we're going to have to go down and do a little working on this. So the bank loan is 100%. So just bear this in mind, right? The bank loan is 100%. The interest is 6% for a full year. So for 18 months, it's going to be 6 by 18 twelfths in percentage terms. So that'll be 9. So in total, the bank loan and the interest is 109%. Okay, so it's 100% and 9%. So 109% is equal to 43,600. The loan is going to be the 100%, so we need to work out what that is. So the loan is 43,600 divided by 109, multiplied by 100. Which is 40,000. That means the loan is 3,600, or the loan interest, sorry, which is 1.5 years, is equal to 3,600. We repaid the loan on the 31st of the 5th. So 5 months are this year. So 3,600 is equal to 18 months. The expense for the element for this year, the 5 months, is an expense, which means 13 months is due on the 1st of the 1st. So you're splitting that number up then into 5/18 and 13/18. So 1,000 of it is an expense and 2,600 is due on the 1st of the 1st. So it's a liability. So our two numbers for our statement of capital are a loan of 40,000 and our 2,600 due. The only other one that can really be asked in these is where they don't give you the investment and they ask you to work out what the investment is. And we've seen that in other questions. So that should be everything in. So we'll just add those up. 831.70. Add up your liabilities. 750,400. That gives you 79,770 as your statement of capital, or capital on the 1st of the 1st. Okay, now I would straight away, by the way, I would immediately put in that loan interest in my expenditure. That's one you can forget, the 1,000. So from my first working. Okay, so that's part one done. 20% of the question, calculate the company's reserves. Part two is calculate the profit and loss from the health shop. Now, this had thrown a little thing in from club accounts into this. So I'll just show you this. So the profit and loss from the health shop is sales minus cost of sales equals shop profit. Shop profit less expenses is net profit. So sales ordinarily would just be the shop receipt, 72,000, and we would put that in there like that. However, hopefully when you were doing the question, you saw this health shop debtors 500. So that's from last year. So it's, you know, like in club accounts, you take away your debtors at the start of the year. Well, this is no different. Anytime there's debtors at the start of the year, you take them away from sales. So in this case, you're going to have to take away 500 from the start. And I would say straight away, go down and check if there's debtors for the shop at the end of the year. Because it's, you know, there might well be. If they're going to put debtors at the start, they might well put debtors at the end. Oh, I haven't seen this question, so I don't know. So I can't see debtors. So we're just going to take away that 500. So we got 71,500. All right, our opening stock for the shop is 2,500. Our purchases for the shop is where are we? 33.9. Now I'm going to see there was definitely no creditors for the shop at the top. There's creditors for supplies, but that's different. Creditors for the shop we're looking for just to make sure they didn't try in anything like that. There at the bottom, there isn't. Shop stock 2350 at the bottom, which we'll take away. So that's 34050, which I'm going to take away to get my shop gross profit, and that's 70 or 37,450. Now at that point, I'm going to go down and put in my shop my shop expenses from at the bottom of the question. So you've got the where am I working for? Salaries include a payment of 14,000 to the secretary. It's estimated that 30% of this salary is attributable to the shop. So less wages, and it's going to be 30% of 14,000. Which is 4,200. Then I've got my light and heat, so 200 of that. I've got my 1,000 of the insurance and 500 of the telephone. Now, straight away, I am going to put those four things. So wages minus 42, because they can't go in twice. Light and heat minus 200, just so as I remember to do this later on. Insurance minus 1,000, and telephone minus 500. So I've got those in for later on. Okay, so at that point I'll add up my expenses, and I'm going to take them away. That's my shop profit, which is going to go in as my first income. Okay, so now from there, I'm going to go back up. I have my trading profit and loss account and my balance sheet ruled out. I'm going to go back up to the top and work my way down from top to bottom, making sure I get everything in and ticking them off as I go. So the first one is my buildings. So I'm looking to see if there's any mention of buildings in the question. So I know anyway, buildings is a fixed asset. And I know there's going to be depreciation of buildings, so I'll just write them down. So buildings 500,000. Go down and see if we bought any new building. So we've an extension of 140. So buildings is at least up to 640,000. And go down to the bottom and see, often they'll revalue buildings. So see here, buildings are to be revalued at 900,000. So there's my three bits of information. I know buildings, if we revalue them, that'll be 900,000, zero accumulated depreciation, and 900,000. And I also know that straight away I'm going to have a revaluation reserve. So I'll just write them in, and then I can work through my stuff. So my depreciation of buildings, I'll do the working here. So it's going to be 2% of the 500,000, adding on the extension of 140. So 2% of 640,000. And that'll be my expense, 12,800. Okay. So remember, your 1 year's depreciation goes in your trading profit and loss account. Doesn't matter what you've done in part A. Then anytime you've got depreciation, you've accumulated depreciation or revaluation reserve. And revaluation reserve in this case, because we've revalued, it's your depreciation from part A. So it's always the number from here. So 20,000. So That's what we start the year off with. Add on your 12,800, and that's your, in effect, your accumulated depreciation, which is going back to zero. And then you have to add on your revaluation surplus. So 640 up to 900,000 would be a what's 640 up to 900,000 would be 260. So we'll add them together. So left out a zero there. So that is 292,800. Okay, so that's my revaluation reserve. So that's buildings done. So tick that off, tick off the extension. We're finished with that, and we've done our revaluation reserve job also. Next one, equipment. So now again, equipment is going to be a fixed asset. We know there'll be depreciation of equipment, and we know there'll be accumulated depreciation of equipment in our balance sheet. So let's look for our equipment. Starts off at 90,000. Didn't sell any. Always check to see if you sold. Then you're looking to see if you bought any equipment, and you did. You bought equipment costing 24,000. So we'll have a look and see what there is on the equipment. So what's it tell us? It says equipment is to be depreciated 10% of cost for the full year. So normally there's some equipment being sold when it's like that, but it's not. So it's nice and easy. It doesn't matter when we bought it. So it's depreciation of equipment. And it's just 10% of the 90,000 plus the 24. Which is 10% of 114. So that'll be 11,400. That's your expense. Now we know anytime we've got depreciation, we've either accumulated depreciation or revaluation reserve. In this case, it's accumulated depreciation. And that's your answer from part A, 18,000 plus your 11,400. Which is 29,400. Okay. Equipment was 114. So we'll add those together, 84.6. Then we've our last one, fixtures and fittings. And again, I know I'm going to have a depreciation of fixtures and fittings as well as accumulated depreciation. So we'll see if there's any fixtures and fittings. Didn't sell any, no mention here, and it's just 15% for the full year. So nice and easy. We don't have to do working this time. 15% of fixtures and fittings of 30,000, which is 4,500, which we're going to add to the 9,000 we already had over there. So 9,000 plus the 4,500 is 13,500. Taken away from the 30. And that's my three fixed assets in 16,500. I'll leave a gap in case there's another one. It's highly unlikely there will be. And we'll just drive on. So tick that off as well. Stock of health food already in. Tick it off, or it should already be ticked off. Stationery is next. So stationery is an opening stock of stationery. So remember, you take away opening. You add on opening stocks and you take away closing stocks always. So our rules are add opening stocks, take closing stocks. Add opening stocks from the start of the year, take closing stocks from the end of the year. And then for debtors, debtors and creditors at the start of the year, take them away, add them at the end of the year. Same as dues at the start of the year, take them away, add them at the end of the year. Prepaids, add them at the start of the year, take them at the end of the year. There are rules for all these, but we go through them as we see them. So stationary. So if there's stationary here, there has to be stationary in this question as well. So there is 2050. So am I working? So we've got our stationary. Always start from your figure in the question, 2050. Add your opening stock of 25 and take your closing stock at the end of the year. They're surely stationary closing stock. I can't see any actually. So just see. No, there's not. So just add them together and you get 2,600. So your expense is 2,600. Okay, so that's that one. Next one, heating oil. So heating oil is light and heat. So we've heating oil here. We have heating oil, or light and heat here. We have heating oil here, and we've electricity due of 540. So we've quite a bit with that. So I'm going to, sorry, this is all from the previous question. Just delete that stuff. I just copied and pasted from something else. All right, so the light and heat starts off at 2510. There's an opening stock of oil at the start of the year of 360. So closing stock of oil at the end of the year of 300. But there's also electricity due at the bottom of 540. And dues at the end of the year you add on. So dues at the start of the year you take away, dues at the end of the year you add on. And that gives you your light and heat of 3110. So we go to put in our 3110 as our expense, and we see there's a 200 also to be taken away. So 3110 minus 200 is 2910. Okay, so that's our light and heat done. And again, tick them off, they're all dealt with. Health shop for the debtors, that's ticked off. We've put that in our sales. Creditors for supplies to the health centre. So that's our next one, purchases of supplies. So down here, we've got purchases of supplies, 27.7. We've got creditors for supplies to the health centre. So included in this 27.7 is this money that was owed us from last year. So you always take away creditors at the start of the year and add creditors at the end of the year. So we go down and see if there's any creditors for supplies to the health centre. At the end, there is 2560. And that's really all it can be. So we'll just finish that out at 28,660. So purchases of supplies, 28,660. Clients fees in advance. So big working. So we've clients fees here, and there'll be a couple of clients fees at the bottom as well. So again, start with your clients fees from the main part of the question, which is 295,400. Clients fees in advance. So they paid us last year, but it is for this year. So it's a prepaid. So we added at the start of the year. So we're going to add that advance of 6,200. If there's any prepaid at the end of the year, we're going to take it away. So that's for clients who've paid us, say, in December for January's treatments or January's membership. We take that away because it's to do with the following year. If there's any due at the end of the year, so people have used our services but haven't paid up, that is 920, which we need to add on. Again, just be ticking them off as you go. Just see there's nothing else around clients' fees. There's not. So we can add that on. So that is 300,980. Now, clients' fees are an income for us. So into our income, 300,980. So that's ticked off now. Investments 250 are an asset. Now we know anytime there's investments, there's investment income, 7.5. It's not a rate, so we're all right on that actually. So normally it might say 10% investments, and then you would work out the rate and you'd work out your interest and so on. In this case, it's given to us. Authorized share capital 1 million. Obviously, I should put that in properly. So 1 million is our authorized share capital. Our issued share capital is 700,000. So authorized and issued share capital. Okay, so they're dealt with. So everything at the top is now ticked off. The current account balance is in, shop receipts is in, the client's fees is in. This 7.5 is investment income. Now, investment income goes in our income. So often, as I said, you'll work it out as a percentage. Just check at the bottom, there's no investment income due. There is not. So that is 7.5. Okay, laundry 3020. There's no mention of laundry in my question, so that can go straight in. 3020 as an expense. Tick it off. Stationery we've done, light and heat we've done. The new extension, these are all ticked off. Wages and salaries, that's minus. Where is it? Wages and salaries, 68,250. And take away the 4.2. I'm just taking a chance on that. There was nothing at the bottom. So, wages and salaries. No, there's not. Purchases for the shop is in our shop profit, which I presume I've written in, yeah. Purchase of supplies we've done, insurance minus 1,000. So that is 5.5 minus 1,000 is 4.5. Again, just making sure there's nothing at the bottom. There's not. Cleaning 319. There's normally a working on cleaning, so there you go. Cleaning is done under contract payable quarterly in advance and includes a figure for 660 for November. Oh, it's quite hard. For November to January. So of this cleaning here, of this 660, which is for 3 months cleaning, so 220 a month. 2 months are November and December this year, but 1 month of it is prepaid into next year. So 220 is prepaid. So my contract cleaning is 3100. Sorry, there's no prepaid at the start of the year. There often will be. There is a prepaid for contract cleaning of 220, which is 1 month of the 660. Only 1 month of the 3 months is actually prepaid. So my cleaning is 2880 then. So we can stick that in. My telephone minus 500. 2160 minus 500. You assume there's no change to the telephone. Um, the bank loan, well, that's done, and I've put in my interest. It was the first one I put in, and this bank balance will go into our current assets. If it's on the credit side here, it will come down to the other side on the debits. So it will be 22,370. Now I'm aware there might be a change to that later on, so but definitely, I know you're not allowed to use pencil, but just be willing to lightly or whatever, because we might have to come back and change that. So that's everything from here in. Down to the bottom, all of these have to go into the balance sheet except working F4, which we've already done. So the closing stock for the shop is 2350, and for oil is 300. Next one, client's fees due, is an asset, money that's owed to us, 920, and client's fees prepaid then is a liability, 1540. You could be putting them in as you go, but I always like to wait to the end. Electricity due is a liability, 540. So you can skip number 4. All the depreciations are in. Creditors for supplies, their liability, 2560. We've done the revaluation reserve. Okay, this is where we're saying the bank might change. The closing bank figure doesn't take into account a check received from a client which was lodged but subsequently dishonored by the bank. The amount of the check was 400, so the amount in our bank is actually 400 less. So it's 22,370, and we have to take 400 away. But it also means that our client's fees due go up by 400. So overall, there's actually no impact to our current assets. One goes up by 400, one goes down by 400. And it doesn't actually affect our client's fees. You're going to get paid. It doesn't affect your client's fees as an income number. Really, if you think about it, the client's fees here, this number here goes down by 295 goes down to 200, 295,400 goes down to 295,000, and then client's fees due goes up by 400. So the overall figure will still be 300,980. So we just have to change that, just to make sure we have it right. So that should be it. Bank closing stock of oil. What have I forgotten? Client's fees due. Oh yeah, and then the one easily forgotten. Then so billings the last one, sure I haven't done it. Cleaning prepaid is an asset. I would put that in if I could. If I was asked like that, I'd put it in pretty much immediately because it's easy enough to forget. So that's it, finished. Hopefully it balances. Don't have the answer in front. Don't have the answer to this question. So okay, we'll add up our expenses. I'm gonna have to. May have to, if I get this wrong, you might have to bear with me. To see where I'm going. So that's our net profit. Don't forget to add on your reserves then. So our reserves first and the first there's around per day, so the 79,770. And that gives you your reserves at the end of the month, end of the year. So reserves 31st of the 12th is 279,820. And we just bring that over into our finance supply. Okay, so our assets. So add them up. Get into the good habits now of adding up our fixed assets. I know that they're all the bad habits that I've given you just to try and get stuff finished in class. So add them together. Then add on your investments. Add your current assets together. Add your current liabilities. Take them away. Then add on your working capital onto your fixed assets to get 127,620. This isn't going to work. Oh, it is. So we'll get our capital employed 1272620. Excellent. So that's that one done. There was nothing mad hard, just a contract cleaning there was a little bit tricky, and obviously the loan was asked in a slightly different way. Anyway, we'll come back and we'll look at these next week. As I said, as part of the revision, I want to try and get a few done over the next few days. All right, see you later.